58%. Pause. That's how much of RWO, a fund that calls itself a global real estate ETF, is invested in a single country, the United States. You thought you were diversifying internationally. You weren't. And today, I'm putting RWO head to head against HAUZ to show you which fund actually deserves the global label and which one is quietly keeping your portfolio exposed to risks you didn't sign up for. By the end of this video, you'll know exactly what's inside both funds, which one delivers real international diversification, and most importantly, which one belongs in your portfolio. Let's get into the data. First, let's dissect RWO, the Spider Dow Jones Global Real Estate ETF. Pause. On paper, it sounds perfect. Global real estate, instant diversification across property markets worldwide. But here's what the marketing doesn't emphasize. RWO holds around 200 positions, and nearly 6 out of every $10 you invest stays right here in the US. Japan gets about 11%, Australia, maybe 5%. The UK and Singapore round out the top 5. Now don't get me wrong, American REITs are powerful. Prologis, American Tower, Equinix, these are dominant global operators. But if you wanted US real estate exposure, you could buy VNQ at a lower expense ratio. You're paying 0.50% annually for RWO. The question is, are you getting enough international exposure to justify that cost? Here's where it gets interesting. Pause, enter HAUZ, the X-Trackers International Real Estate ETF. And the first thing you need to understand is that HAUZ takes a completely different approach. It explicitly excludes the United States, 0 US holdings, none. Japan leads at roughly 24%. Australia comes in around 11%. Then you've got the UK, Singapore, Hong Kong, Germany, genuine geographic spread across developed international markets. HAUZ holds over 200 securities, with an expense ratio of 0.10%. Pause. Let that sink in. 1/5 the cost of RWO. Now stop for a second. I know what you might be thinking. Excluding the US entirely sounds extreme. And you're right to question it, but here's the strategic insight most investors miss. If you already own US stocks, US REITs, or broad market funds like VTI, you're already loaded up on American exposure. Adding RWO doesn't diversify you as much as you think, it doubles down. HAUZ, on the other hand, fills the gap your portfolio actually has. Pause, that's not a flaw, that's a feature. Let's talk performance, because this is where the comparison gets real. Over the past 5 years, global real estate has been volatile. RWO has delivered returns closely tied to the US REIT market, which makes sense given its heavy American weighting. When US real estate struggled in 2022 with rising interest rates, RWO felt that pain hard. HAUZ, with its international focus, experienced different cycles, currency fluctuations, varying interest rate policies in Japan and Europe, different pandemic recovery timelines. All of these create a return profile that doesn't move in lockstep with your American holdings. Pause. That's what real diversification looks like. Dividend investors, pay attention here. RWO currently yields around 3%. HAUZ yields closer to 3.5% to 4%. Depending on market conditions, international REITs often carry higher yields because they're priced more conservatively than their American counterparts. You're getting paid more to hold them, so here's the verdict. Pause, RWO isn't a bad fund, but it's a misleading one. If you want true global real estate, you need to look past the name and into the holdings. 58% US concentration isn't global. It's domestic with international sprinkles. HAUZ won't give you any US exposure, and that's the point. It's designed to complement, not replace. Pair HAUZ with a dedicated US REIT fund like VNQ, and now you've built a genuinely global real estate allocation where you control the percentages. The smart money doesn't buy labels, it buys holdings. Pause. Now here's what I want you to do. If this analysis helped you see your portfolio differently, hit subscribe. I break down ETFs, dividend strategies, and wealth building tactics every single week. No fluff, just data. Tap that bell so you don't miss the next one. Your future self will thank you.